um, a Good Friday, so people generally are relaxing at home and enjoying festivities of Easter. And invariably, what we plan to do here is look at what aspects of the loan scenarios have changed. So EduLoans as a portal came around in 2017. We have more than 10,000 people on the platform at the moment, and in terms of structure, we have about 1,000 plus loan sanctions. And let's keep it free flowing in terms of the session, wherein we look at questions coming on, and Gurpreet, who is on the other side, would help read out the questions, and we will address the questions as and when they come. And invariably, all of you have looking at what you are you would be looking. So let's start ahead with the first thing which we look at. The eligibility. What has the eligibility changed with regard to the COVID-19? So with regard to COVID-19, the things could be that the first thing, there could be an online semester, which means fall 2020 would be an online semester coming in. That's the first thing which might happen. Second scenario which has come in, most of the courses right now, I have GRE waiver. So that means that there is no GRE for these sessions. Invariably, a lot of universities have written out, because there are no testing dates available, they have been flexible on the GRE. The third thing is the delayed intake, which means that the intake has been delayed invariably. And how or what scenarios will the eligibility of various providers change? So let's come to aspect number one, the online semester. Now, online semester, wherein what we do is we have about 14 players on the platform, and invariably we are looking at what changes they have adhered. So for example, State Bank of India, Bank of Baroda, Axis and ICICI have confirmed to us that there is no problem in online semesters as long as the instructions are coming in from the university. Credila right now is undecided, because I spoke to their business head yesterday itself, and they are looking at what online semester can happen. Avance is looking at a direct EMI for online semester. What you mean by direct EMI is that you would be looking at immediate EMI for the program. So as and when you take the dispersal, you would take the immediate EMI. The third is INCRED, which is the case-to-case approval basis. So they have itself confirmed that they will be funding the online semester. The Auxilo has, as of now, confirmed to us that they would not be funding any online semester at the moment. So that's the confirmation which we have received. Obviously, things can change post the lockdown. Prodigy has no problem in an online semester. They are revising their rules. So earlier, Prodigy had an issue wherein you would only sign the agreement in the country. So even you're going to the US, you would sign into the US, or else any other point of view. When in terms currently, the latest update which we'll be receiving on Monday would be that there will be no problem if you join in an online semester. Currently, Empower has stopped funding. So for example, those students who have got an approved loan from Empower only can look at the disbursals. At the moment, any kind of applications they are not accepting. So you would have to look at alternative sources if you were looking at Empower as one of your point of it. In the Leap Finance, that's the newer one on the platform, wherein these are all international funds. They also have no problem with online semester. US banks might have an issue. So as of now, I have not got any confirmations from US banks, but US banks generally want a student or the university confirmation, and they generally want you to be in the US and as and when you come in. So there could be issues in the US bank side. However, currently we did write to various of channel partners like Sallie Mae, Ascent, and Earnest. We have yet to receive a feedback from them, and as soon as we receive a feedback, we would come back to you.
Students can now feel free to post their questions at the end of every slide. You can put your questions in the chat box, and Mr. Singh will be answering those questions. So you can type your questions in the chat box now. We'll just wait for a minute to some questions.
Any questions on the online semester? So whosoever you have looked at the education loan, the banks have not had an issue. NBFCs might have an issue. International funds as of now have said nothing. Education US banks at the moment are non-committal. Let's come to the next point. Invariably GRE requirement. Now what happens is, what you would have noticed, most of the NBFCs base their requirements on GREs, which means that if you score a 300 plus, they will give you a loan. If you score a 298, they might not give you a loan. Some as well look at 3-0, they give you a better deal if you have a 3-0-10 or 3-0-15 or 3-0-20. Now what happens in a scenario wherein no GRE requirement is taken? So which means that UC Berkeley, you can get into, say, the likes of UC Berkeley, etc., based purely on your GPA and your profile. Now what happens is, so what we have done is we've categorized institutions based on the GRE parameter. So for example, SBI does not, there will be no change in the parameter completely, because their structure of the loan is not based on GRE per se. It is more based on the collateral and the cosigner. Bank of Baroda, Axis, and ICICI all are based on university and course. So they do not consider GRE as a value. There could be a partial hit which you could be taking in. The other aspect is when you look at the NBFCs. Now this is where it comes in. Credila, Avance, Incred, and Auxilo are very keen or look at GRE as an intake. So they are, when we spoke to them and the products head yesterday, as of yesterday, they have to come out with a rule wherein they would be changing their product and looking at your holistic or your university and course, rather than say just the GRE score. So this is going to come out very soon from everybody, because you would find a lot of admits coming in without GRE scores, and that's when these rules will come changing in. In terms of the international finances, the Prodigies, the Empowers, and the Leap Finances of the world, they're all course and university centric. So none of them have changed with the GRE requirements. So even if the university is taking with or without GRE, your loan requirement or loan request will not be affected in any way. And the fourth is the US banks. US banks mainly rely on the cosigner. So again, they are university and course centric. They're not typically GRE centric. So you have to look at this requirement when you come in. Yes. Okay, no problem. Start the broadcast, and I'll start from the beginning. No problem. That's okay. That's fine. Okay. Okay, guys, I believe there were some technical errors, and some of you were not able to hear it. Most of you were, but there were a few people who joined in late, and we kind of started in early. So at the moment, what we'll do is we'll do a recap of the entire detail again, so that people are looking at what we did with, and those who have been attending it before can have a recap as well. So brief about first EduLoans. EduLoans was a portal wherein we help students with their financing needs. We've been there since 2017. We are an offshoot of Imperial Group, which is where we started with our own consulting firm earlier. We have done more than 10,000 students on our platform. There have been approximately 2,000. Apart from that, we work with US banks, which is Ascent, Sally Mae, and Earnest. Uh, this this will be about a 45-minute session talking about the eligibility and how COVID has impacted eligibility, about the interest rates, about the processing fees, which loan is better, US dollars or INR, and how to go about the present changes. So let's look at it again. The eligibility is basically how does the eligibility impacted compared to this year versus last year. So what trends we are noticing is that firstly, there could be an online semester, wherein in terms of online, we could have looking at universities doing their course online rather than you physically going in there. So that's the first scenario which can develop. The second scenario which is happening is that a lot of GRE scores are student universities are taking in with no GRE scores on board. That's invariably there. And the third is the delayed intake, which means that so basically, the GRE intake, delayed intake means that the courses will start a month or 2 months later. So let's look at what happens or what change in your education loan scenario happens if you go in or if the online semester happens. So this is live update. We spent the last 2 days talking to various product heads of all the NBFCs and banks and what they think about it. So worst semester could be that the first semester could be online. So wherein the SBI, Bank of Baroda, Axis, and ICICI have confirmed to us that as long as the instructions are given from the university, there is no problem with the online semester. That's the first thing which would come on. In terms of others, the NBFCs, we were in touch with Credila. I was in touch with the sales head of Credila yesterday, and he said no decision yet has been taken for the online semester. Invariably, yeah.
Sorry, I think there might be an audio issue because the students are still putting in the comments that nothing is audible. And when I open the session on the phone, also there is no audio. So I think we might have to restart the session.
But restart the whole session. But people, okay.
Because students are complaining that the session is not audible, and even on the phone when I've opened it, there's no audio.
Okay, fair enough. So then will you want to restart the entire session?
So what we could do is on your screen, you could just type in on like a notepad that we are restarting the session to enable audio, something like that, so the students can see it. Because a lot of students have issued that comment.
No, but okay. In the chat section, I'm not able to see anything.
This is one sec. I'll make you the organizer because it is visible over there. Now you're the organizer. You can see a questions box.
I've just put a message to all stating that we are restarting the session. So we
Okay.
shall restart the session. We shall restart the session, sir. I'll stop the recording. I'll start it again.
I don't think that's a good idea actually.
No, I don't think at the now. Okay, so able to hear now, able to hear now. Okay, so let me just put it in the thing.
Okay.
Just
Let me open that link again. It's opening. Able to hear now.
Manit, you are very well audible actually right now. Maybe in between there would be some bandwidth issue. That's the reason why they were not able to hear. But I believe everyone is able to
okay.
hear now. So you can maybe continue the session and just
I
put
think
in the
Yeah,
I
chat
think
box.
yeah.
yeah. So we will just put. So what we do is, Tanmay, we will put in the chat box. Can you just put it? Who is not able to hear it now, and we take it forward from
Yeah,
there.
perfect. If there are
And the
many entries,
entire
then we,
session can be.
yeah, anyway, we are recording it. So this will be them as well.
Yeah,
But I mean, there might be a bandwidth issue in between. That was the issue. So Manit, you can continue
Okay.
with your session.
So okay. We were at the online seminar bit. So currently, Avance has what has happened is Avance has said that they will be looking at funding the online session with the direct EMI, which means that your repayments will start from day one. That's what Avance Credit has confirmed, that they would be looking at it in case the students go for an online session. Incred has given us a feedback that they would look at it as a case-to-case approval. Oxilo at the moment says the present product paper does not support an online semester funding. So this is where we are in terms of the four NBFCs. In terms of Prodigy, they have changed or revised their product. So they are now capable of giving you a fees on an online semester. Earlier, it was a requirement that you would require to go to the US and complete and join in and then sign the final paper. So that amendment would be coming in on Monday. We've already confirmed that. So we can declare it that it will be coming in. So all those who have applied to Prodigy need not worry. Those who have applied to Empower at the moment, unless the loan is approved, they are not funding here at the moment. So that is one pinch point here. So all of you guys who are looking at Empower or to apply to Empower, you would have to look at other options. And we at Loans have 14, so you have enough number of options. So that's not the issue here. But so that is one lender right now who is affected, you can say, by COVID-19 and currently has stopped lending. In terms of Leap Finance, this is the new one on currently on the system. You would have heard, some of you would have heard about it. They are also funding the online semester. US banks at the moment, we have not received any kind of feedback from them on whether they would be looking at funding an online SEM. In most probability, we would say that they would look at the student coming into the US and funding it because their jurisdiction, etc., would start, or the US or their loan papers or loan documents are US centric, which means that they are enforceable in the US. So once you reach there is when you look at that scenario. Now, another thing which is changing is many universities are proposing that they would not take in GRE for their intake. Now, what happens in this case? Many financial providers base their requirements on GRE score. So you have somebody like Credila who says 300 plus, you would get an unsecured loan. Below 300, you might not get an unsecured loan. So what happens in this case is these people will have to rework what is required. So as far as other lenders on the platform go, State Bank of India is actually does not university centric. It is purely centric on your collateral and the cosigner value. So they do not look at university GRE score per se. Bank of Baroda, Axis, and ICICI, they all have a preferred list of universities and which they look at. So none of them are GRE centric. The ones which are GRE centric are all the NBFCs, which are Credila, Avance, Incred, and Oxilo. All of them will have a revision of the product parameter. That's when they come in, and you would see their product parameter coming in, and they would move more to the university and course side. The international funds like Empower, Prodigy, and Leap Finance are primarily based again on university and course, so none of them get affected there. US banks are not affected at all. They do not consider a GRE score in any kind of credit rating or system. Now, the last but not the least, what happens if there is a delay and start to the semester? Now let's understand what is going to happen. What every bank loan has a particular cycle. So the first part of it is submitting the documents. The second part of it is the banks or the financial providers check your parameters, which means you as an applicant. They check what is the cosigner, they check the income tax returns of your parents, and in case you're going for a secured loan, they check whether the property is legally enforceable or not. Now, this involves various government departments. So, for example, enforcement of, say, and checking whether your property is legally enforceable is part of the district collectorate. So they have to get a sign off from there. So what will happen in this scenario is that when these things pile up, because the government will not fully maybe start functioning at full speed immediately, and they might have other priorities in place. So when you're looking to apply into the parameter, you might have issues in getting your loan done on time. So these are things which you have to consider. In general, we predict as well, there is more prediction that in terms of, say, interest rates, in terms of various other things which will be covered in the next slide, we don't foresee a change in the bank's parameters. SBIs, BOBs, Axis, ICICs will remain the same. What we are feeling, again, this is maybe in the present scenario, there would be or could be a tightening of parameters from the NBFCs, wherein the student profile, the cosigner profile, as well as the collateral would be looked at in greater depth, and you would be looking at these across the board. That's the one thing which we see can happen in the years to come, in the months to come, actually. In terms of international funds, we are seeing there could be a tightening of profile. We have one lender who has stopped funding at the moment. Others could look at their book and see which courses to run. There could be maybe a shortage of a reduction of courses and universities which they might fund. So that's what we look at that. In the US, if you're looking at US bank loan, which is you're looking at having a valid score of valid cosigner in the US, what is going to happen is their main credit score is the critical criteria. So how much they are affected due to COVID-19 and whether they do have a job or not, or have a stable income or not, will determine your interest rate and your loan eligibility. So that is the critical parameters to take in when you're looking at this in terms of how this COVID-19 or the late start to the semester is going to affect your overall loan eligibility. Any questions on that at the moment which you would want to take in? Okay, let's bring in the second part of the session, which is the interest rates. So now let's look at what interest rates have to offer. So interest rates vary as per financial provider. So a few things which we look at the moment is the concept of repo rate. This is a new thing which has come in across the board, and how are banks treating this? So repo rate is the rate at which Reserve Bank of India lends to the banks. This is the base rate wherein most of the banks operate with. The repo rate has fallen by about anywhere between 1 and to 1.5% in the last 2-3 months. Most of the banks are dependent on the repo rate of the final rate. So you would see a reduction of the repo rate and corresponding reduction in your interest rates. Uh, Expected slightly to move higher for NBFCs. Now, again, this is a gut feel, but with that corresponding thing, there could be an increase in interest rates. Now comes to the third part, which is called the LIBOR. Now, LIBOR stands for London Interbank Offer Rate. It is the rate which banks in the world lend to each other uh, and lend dollars to, in fact, to each other. Now, LIBOR has significantly come down. So it was 1.85 a couple of months back, and it has come down to 1%. Right now, it's at 1.05, 1.010. This, in fact, has reduced the interest rates globally. So all US funding loans, again, will get a reduction of rate. So now, let's look at what the banks individually have to offer. The first thing is State Bank of India. The State Bank of India has cut its flat rate for US for students, international students, from at 0.75, which is where we are. Bank of Baroda has again a repo rate linked scheme, which has again cut. So their base rate right now is at 7.5, which makes them one of the most competing banks across the board. You charge a 1.25 or a 2% premium depending on the university. So that's what happens in terms of BOB. So their BOB rate right now is at 8.75 or at 9.5, which can be further reduced for a girl child. So they are very competitive at the moment in terms of rate. In terms of Axis Bank, sorry, just a minute. I think I just pressed it by chance. Oops, sorry. Okay, we're back. In terms of Axis and ICICI, both are players on the platform, which are obviously, these are private banks. They're not as competitive, but their rates have definitely come down. So you would get them anywhere between 11 to 13% is what they come in for, say, Axis, and from 10.99 to 11.85 is what you get from ICICI. This obviously, both these banks also give unsecured loans, which help a student a lot. So you should look at your loan parameters, and they all have gradings: A1, A2, A3, and Axis has A and B, and they give unsecured loans as well. So this become a very strong point of it from looking at this. Now let's move out to the other people, the other side of town. The NBFCs, what we think or what we foresee, will find it tough to raise money, and the financial health of the sector would deteriorate. What this means is, in layman language, that if the money the NBFCs will borrow will be at higher rate. If it is at higher rate, you will get it at a higher rate. So it's all interlinked. Now, at this stage, let me just put in people. Credila has become 100% HDFC Credila Limited, which means that's 100% owned by HDFC. So currently, they are on a very strong footing in terms of in terms of the backing. They have cut the rate by 0.25%, is what last I came out was the last conversation we had. So their rates have come down. Now, in terms of others, so Avance itself has been recently funded and by Warner Pickness. It has about $200 million of funds available. Last check was about 800 crores. So they are also comfortably settled in. Rates might increase, is what is the question mark, but we don't know anything at the moment. At the moment, they stay same. Incred, Auxilo, both rate expected to increase, may not increase, but NBFCs in general, from the economic forecast, although I'm not the economist and I'm neither the Reserve Bank of India governor, but what we think the market is going to function is their rates are going to go up. The next part, international funds. Now, very important, A will find it hard to raise more capital. You have to understand that at the moment. Although the world prices are increasing. So Prodigy currently, as per they raised 1 billion last year, which they are sitting on some pile stock of money so they can lend. Another thing which comes to international funds is how is the loan structured? Is it a fixed rate of interest or it is a variable rate of interest? If it is a variable rate of interest, it's primarily based on LIBOR. Now, LIBOR has come down, which means at the moment, among these three lenders, Prodigy is the one whose rates are coming down because they are variable. They are based on LIBOR. The other two, Empower and Leap Finance, at the moment, there is no change in interest rates. They remain fixed as they are. Now, what about US banks? US banks, what we foresee is that there will be a decrease in rates. Now, obviously, it will depend on your cosigner profile. What is going to happen is if the cosigner profile is strong, the US economy in terms has dropped its rates by about a percent and a half. In fact, the guy who went in spring this year, we managed to get him rate about 3%. And that came out as a revelation even for us, because until last year we were getting the best rates about 3.98, about 4, around that range. So, but what we expect this year is that we will definitely look at a rate reduction, provided you have a strong cosigner. So that's the one thing undercurrent which you have to look at. So in terms of interest rates, how they will vary due to the impact of COVID-19 differs for different categories of people. And hence we have to be in terms quite choosy and selective. Obviously there are other things, eligibility plays a role. So wherever, first thing you have to check eligibility, second what kind of cost involved, and interest rates is the most important cost involved. Let's come to the processing fees bit. Now this is where many of us have issues. Now what to do? Do we pay, not pay? Do we have a sanction, no sanction? In terms, now let's look at refundable. What do you mean by refundable loan? Refundable processing fee means that if you have paid a particular financial provider, you would at the moment, in case you do not go, get the complete money refunded. So the concept of refundability. Second, the concept of transferable, which means that I pay the money right now and I'm looking at fall 2020. Due to whatever circumstances, I choose to go in spring 2021, or I choose to go in fall 2021. That's called transferable of processing fees. Third concept, which you might take into, is called the partial fees. Partial fees is basically wherein you have not paid the complete processing fee. You have paid a partial amount of the processing fee to get your sanction letter. Now let's look at how these are the three questions you would have: whether the fees is refundable, whether it's transferable, whether I can pay partially right now and pay the rest later when I decide, are questions which govern all of us at the moment, and that's what is holding us back. So let's look at each lender, what they have to say with regard to these three aspects. Now, very importantly, I find it here only one guy is right now cooperating or has taken on a policy which is incred for refundability. Now, obviously, State Bank of India, Bank of Baroda's, once you pay the 10,000 odd rupees, the cases are non-refundable. They simply will not refund it back in terms of anything. Same goes for ICICI Credla Avance. Although I might say that if the lockdown changes, there could be a possibility of NBFCs coming out with a refund policy. So that's definitely on the cards, but at the moment where we see it, or at the moment the status facts hold good. One NBFC has gone out, which is Incred. They are commendable. In fact, I spoke to the country head as well, and he was like very gung-ho. He said we will support the students and their dilemma, so we don't want to make money off the processing fees, and we are very comfortable refunding it. The other part is international funds. So international funds charge a processing fee, although you might not think about it in the normal circumstances because you never paid, but it is added into your loan. That, in case if the disbursal is taken, is non-refundable. So that's very clear about it. So here also we are safe. So if we take the loan, if we only disburse it, we pay the fee. Otherwise we don't. US banks don't charge an application fee, so there's nothing to talk about there. Okay, so let's talk about transferable. Now, this is one thing which majority of them are ready to look at and help you with that. Now let's see what happens, how the case builds up. So if you're looking at transferable, so if you taken a loan sanction right now, say from an SBI or a Bank of Baroda, an Axis, etc., the sanction remains for 6 months, which means after 6 months, the loan is no longer valid. Now this is where things will come in. So all financial institutions, you would have to reapply again for an education loan. So if you get a sanction this semester, say from any of the financial institutions, the same sanction will not remain valid until the next until the next, say, spring or fall intake. Spring maybe, fall definitely not. What you need to do is you need to reapply again, and this is where the differences come in. All the nationalized banks, say SBIs, BOBs, and Axis, have communicated that in case you are reapplying, you have to pay for the money next again. ICICI is the last communication, or their product team has signified that in case you are looking at transfer, they will not charge anything in case you look to transfer it to the next semester. All NBFCs will not charge you again if you transfer your sanction to the next year. You will have to resubmit the documents though. It will go in the basic KYC documents, the basic IT returns, your CIBIL score, etc., which may not changed. They will not charge processing fee again. In terms of Prodigy, Empower Leap, none of them will charge it because you've not taken the disbursal, so it's immaterial. US Bank also immaterial. So here what we see is more nationalized banks are a bit stringent right now, or they have their policies more set. So their sanction letters will, etc., you might require transfer, it may not happen. But NBFCs right now are being cooperative, and they will 100% sanction or not charge a processing fee again in case you defer to the next semester. Now, what about partial fees? So many of you would think of the idea wherein we probably have we pay partial right now and just hold our offer and hold the stuff and not. Here again, as of now, no policies have come in. The only person who has been proactive is Incred. They have taken out a partial fee scheme wherein you can get a partial fees and block the interest rate. So what they are saying is that interest rates may vary as we go along, depending on how the market gets reacted. At this stage, if you pay a partial fees, you can block your interest rates and your eligibility and the loan amount, etc. And as and when you require it, you can pay the remaining fees. No other institution right now has a policy of accepting partial fees for giving you a sanction letter. Very tough at the moment, but these policies can change. We are in the first stage of coronavirus in India. Many stages, maybe many, I hope not too many, but many stages to go from here. But as and when things develop, we will definitely be putting it on our platform and keeping you updated. So this was about processing fees. So the gist of the situation is that most of them transfer is fine. So if you're looking to go maybe this year or maybe next year and definitely looking to go, you can go ahead and pay the processing fee and be ready and wait as things come in. But in case the question of you're going to any foreign country or for higher studies abroad is right now questionable, then it is better to wait. So the processing fee can hold on and you can redo the applications when you're completely mentally ready. Now, the other thing which now the most important and the heated debate of thing. Now with many, so when we went to the US and we were, say, 10 years back, there were only Indian lenders. There was only like the nationalized banks, not even the NBFCs who came on board. So our thing was very clear. You go to the bank, you talk to the manager, your dad sweet talks him into getting you an education loan, and he says, how brilliant are you? And then the loan processing starts. But come 2020, that's not the case. Now come 2020, you have, like, we have 14 players on the platform, and you have at least another 5 or 10 active players in the market. So that makes it around 20-25 players to choose from. Now, USD versus INR is a very hot topic at the moment. The reason is that the rupee has depreciated by around 10% in the last 2-3 months. Now, what happens in international? So, what happens during an economic recession or during when the monetary things tighten up? The assets in the world go to safe havens. US dollar is considered a safe haven for many, many, many people. So they stop investing in Indian equities, they stop investing in Indian growth projects, and they go back to the US and invest in minuscule returns, but in US dollars. What happens in that case is the rupee depreciates. So for all those people who took loans last year, say 2018-19, and those took in dollars and those who took in rupees, currently as the scenario goes, the rupee loans are more favorable because straight parlance is that if the rupee depreciates by 10%, which means you add dollar loan plus 10% to your Indian loan. So that is one thing which currently is affected. So at the moment, as we see it, rupee loans were a better bet. I mean, the depreciation has happened now. Going forward, how the rupee reacts versus the dollars and which loan you would want is subjective. So nobody has been able to predict the rupee or dollar forward. So in terms of forward, rupee is not expected to dip anymore. The rupee forward is roaming at a 3-month roaming around 78, 77, 78, which is not too bad. We are already at 76. So we do not see that the rupee will depreciate any further, but nothing can be said. So this is the important parameter when you look at the USD versus rupee. Another thing to look at is the LIBOR versus repo rate. Now both are dropping, but you have to understand that the repo rate cannot drop to the level of the LIBOR because India has an inflationary economy. So in case the point is the repo rate right now is at 4.4, which has been the best ever. The LIBOR is at 1. LIBOR can go by the Euro LIBOR, which is like the European LIBOR, which is the Euro is traded on is at 0, so it can go down. There have been instances where in US economy in 2009-10, the LIBOR was at 0 or at 0.25. So you will see the LIBOR going down further, which makes the US dollar loans more lucrative. So put it in a nutshell right now at the moment, say case scenario 1, the rupee remains as depreciated as it is already. It's already taken the hit. The LIBOR is going down. You are looking at, say, a loan which is, you can say, a variable loan which is based on LIBOR is a good bet. Case scenario 2, rupee again depreciates further. Then obviously if you are stuck up in a fixed US dollar loan, which is even more deadly because the whole world rate is falling and you're paying at the higher at the rate which was, say, during the economic boom, is when you are stuck up. So those things you have to take into consideration and decide what you have to do in life and take it forward. We will be reviewing the situation. All our counselors will be ready to help you and take it forward from there. So that's now the last part of it, and it's called the bullseye. Bullseye means let's see what we have to do now. So we've understood a lot of things, got confused, understood some, confused the others, and but we are definitely open for questions, which will start now. I can see 35 questions on my system, so a lot of questions to be answered across the board. Let's see how you can best mitigate the risk of COVID-19 and help you solve your loan problems. So first, let's look at more options. Birds, in our in your hand are better than birds in the bush, which means that if you have 2-3 multiple offers ready, sanctions, ensure that it happens. Do not rely on any single player at the moment. Although obviously some are very strong. So if you go for SBI or say BOB or say HDFC Credila, they're very strong. Nothing is going to happen to them. But you should look at 1 or 2 options here. That is what we would want you to look at. Second, processing fee can be paid later. So you can wait until 1st July or on decision. Now here, another thing is where it's important. The important aspect is that in case you are looking at a collateral backed loan from a nationalized bank, so we spoke to Bank of Baroda. So what they said is they will open special windows and and they will ensure that to the best of their processing systems, they will sanction them on time. So that's the understanding. But you see, like I explained to you, you need to have the collector office involved. You need to have stamp papers. Right now, what we are seeing is an issue with stamp paper. Stamp paper are the document on which the loan is written. There is no stamp paper in the market. At the moment, simple stamp papers are not available. That's what the banks told us, that stamp paper shortage is happening right now. So things will get bottlenecked. So if you're looking at a secured loan, say from the SBIs or BOBs or even from ICICI or Axis or any of the channel partners, and you are looking to go abroad, start your process. If in worst scenario, you might lose on the processing fee, but it'll hurt you more if you are unable to get the funds arranged on time and your course starts. So that's the dilemma which you think about. If you can afford to pay the first semester fees yourself, please wait. Not a problem at all. Another thing, what is happening recently is that most of the banks have started accepting digital documents, which means that they don't need to come to your house and sign the documents. You can send them online and they will give you an offer letter online. This is like amazing in the sense, until last year or maybe we could never think of it. The RBI has made such a stringent rule that they had to be KYC verified, you need to have a fingerprint and so many things on the thing. But now all this starting. So what we are doing at EduLoans is we are making a single platform for multiple applications. So typically when you come on our platform, fill up the form, attach the documents, and you click a button, the file gets sent to the FIs. That's what we are planning on. We will be ready with that within the next week. So before the lockdown ends, I assure you that we will be ready with that. And once we are ready with that, it becomes very convenient for you to go across the platform and apply to FIs at your convenience. So this is what we have to say in terms of various COVID-19 point of view, in terms of the roadmap for the education loan, which has got affected by COVID-19, and how policies in each and every bank are changing. So that's where we are. Now I leave it open to Rupee to get in the question, then we can start looking at addressing majority doubts.
Thank you so much, Banit sir, for taking this session. We have a few questions that have already come in, and people can feel free to post their questions. So I read out the first question now, which is, can we go for loan from Prodigy for fall online semester and then US bank for remaining semester when in US?
Absolutely, you can. So Prodigy will take out, so this is what I spoke to the Prodigy head, Mayank, today morning, and he said that the policies are getting in place, they are working on it. So hold on, I would say another week maybe, you will hear out from them. You can take the first semester from them, and the remaining amount you can go when you reach the US, you can look to disburse that loan.
The next question is from Vipul Shinde. If I'm looking forward to go in fall 2020, when should I sanction the loan looking at the current situation in Mumbai?
So let's wait until end of April, say 1st of May, May or maybe 1st of June. Let's wait until end of April. It depends what kind of loan also. So If you're looking at a secured loan, which means a collateral backed from a nationalized bank, which are definitely very, very cost effective, then advisable to start early. NBFCs can quickly do the processing in 3 days or 5 days. They are fast. So it depends on what kind of loan, but definitely look, maybe till the end of April is a good time to start. That should be the point to start off.
The next question is from Vaibhav, and the question is, sir, can you please put your views on IELTS?
So in terms of education, no financial provider looks at your IELTS score in terms of deciding whether you are looking at a loan or not. So I can speak only from that side. I would not want to look at it from the university perspective. They have started with Duolingo, and I think we've got Hiren Rathod, who heads the business at Imperial. He will touch base upon what the universities and what they are thinking of after a session for about 5 to 10 minutes, and we can take it forward from there. The Gurpreet, one thing, the duration is 60 minutes. So can we increase that? That could be a possibility.
Yeah, I think so. Karthik, we'll be able to extend that. Yeah, sir, I think so. The recording will not close. It will get extended automatically. No problem.
Okay. Okay. Continue.
I'll read out the next question, which has come in from Priyanka. Is a person holding H4 visa allowed to be a co-signer?
For the US loans, no. H4 visa is not eligible for a US loan. It only has to be a green card holder, or it has to be a US citizen.
The next question is from Nikhil Shelke. Will Empower give loan for fall 2021?
Okay. That I would not be able to answer, Nikhil, at the moment, because I do not know what their policies are. We have been in touch with them. They're saying this is a marginal dip. So most gut feel says yes, but at the moment I cannot commit.
The next question is from Akhila. If I am not able to get my loan approved before the semester starts, is it possible to self-fund for the first semester and start the loan from the next semester?
Absolutely possible. Just a few viewpoint here. You have to be careful on the concept of power of attorney. It looks very simple. It's a very simple document, but it is a headache getting it through. The reason is that invariably what happens is power of attorney needs to be first signed off by your embassy in the US. It has to come here. It has to be signed off by the local collectorate here, and then your parents can fill in or complete the papers of disbursal documentation. So in case my suggestion hereby would be, if things don't complete on time, obviously that's a suggestion, but try best to do it, because otherwise the process slightly gets extended in terms of where we are, and it just can lead to a delay in terms of the things.
Next question is, if we opt for Rupee loan, won't it mean I need a bigger Rupee loan at the moment to study, though the repayment at this rate is better?
I completely agree. So this has been one point of contention between us, that in case they are looking at amount or loan amount increase between all the FIs. So at the moment, what has happened is Avance has given us a thing that they have a 2 lakh rupees, 80,000 to 2 lakh window approval, wherein all the students who currently are drawing the loan are looking at future. They are looking at that amount, which is cumulatively about 7 to 10% of your total amount. So that's what they look at. Other NBFCs at the moment are non-committal, and once we get any kind of directions from them, we will be able to give you a clear idea. But yes, this is an issue because the amount of loan required and the amount of sanction right now you've dropped by 10%. So literally you require 10% more loan. However, all of them are ready to give you a top up or an increase in loan provided you give collateral. So that's one thing which enhancement of loan is possible, but they may not look at it only on a non collateral or fashion. They might look at it with a collateral. So that's where we look at in terms of NBFCs or increasing the size of your loan.
The next question is BOB is not processing my loan right now, as they said only cash transactions is working, so they won't be able to process my loan.
Correct. So until lockdown 15, so we've been in touch with them. So in fact, I spoke with Bharat Chawda, who basically heads the retail division completely in their head office in BKC. So what he told me is at the moment everything is on lockdown. They are only doing in very critical things which are required, and they're keeping minimal staff. So let this lockdown close. We have got assurance from BOB that in terms they will open special windows and processing of this will be taken in faster. So they are aware. We will push in and we will get your loan on time. So don't worry about it at all.
If we defer to spring, when should we start with the loan?
In case you want to defer to spring, you can start in October or say in September, October. That's a good time if you're looking at deferment only. The other thing is between spring and fall, your sanction letter remains for 6 months. So in case you've already decided to defer, you can start in say September. That should be a good time. August, September should be a good time. But if you are looking still in the dilemma that whether to go for spring or fall, you can get your sanction letter in. It remains valid for 6 months. And as and when you go in the spring, you can use the same sanction letter. So you can be on your financing needs can be taken care of. That's not your tension at the moment.
I hope that answers the question. The next question is, can a bank issue a bank guarantee to a foreign bank for a USD loan?
Technically not allowed by RBI. So what happens is the foreign guarantees is not allowed by Reserve Bank of India from any Indian bank to be issued to any foreign bank, and then you would look at dollar loan. Although this is not my purview, this is not the purview of edu loans, but offhand, as an ex-banker, I can tell you that legally there are complications.
The next question is, will they fund only tuition or living expenses also?
They means all the financial providers, Gurpreet?
Yes, that's what they are asking.
Yeah, they fund everything. So in the end of the day, all financial providers are funding your complete. They want you to they fund your tuition fees, they fund your living expenses, they fund your travel expenses, they fund your books, they even have provisions to fund your laptops. So all of that gets funded. That's not the problem at all. Obviously, there is a concept called margin money, which means that so some have it, some don't. So which means that a part of the financing you have to do yourself, which is called margin amount. So if your total cost of education is rupees 100 and the margin money is their margin is 15%, which means they will fund up to 85. Remaining 15 you have to fund yourself. So that concept exists. It's there with many lenders as and when they move in. So national banks and NBFC, etc. So that depends on them, but they will fund all your needs.
The next question is, in this current scenario, will it be better as of now taking a loan from Prodigy or Credila?
A very tough question. So it depends on individuals. I would not want to give a blanket approval or not or across this board. Let me be very honest. This is where we are in terms of. So it depends on what kind of loan you are getting from there and what you would want to do. So you like the flexibility of Prodigy or maybe the customer interaction of Credila. So here, I would say it's a case-on-case discussion on a platform like this. I would not say one is better or the other is not.
The next question is there a provision to book forex against rupee loan to hedge foreign exchange risk?
Actually, there is. So Axis Bank has it. Axis Bank has a product which it's not part of the education loan though, but they do have a product wherein you could have booked forex looking at student loans in terms. So they do have it. In case you would want to connect us to an Axis Bank representative, we can look at that across the board. Say they do have that provision. So that exists, but as part of the education loan output, it does not. It is an independent forex kind of a facility offered by a few banks.
Is Bank of Baroda interest rate fixed or moving?
All Indian interest rates are moving. So Bank of Baroda interest rates is based on repo rate, and any nationalized bank or NBFCs are based on that.
Should Credila be chosen before US banks, or perhaps US banks are anytime better?
Depends on what rate of interest you get. See, nobody is bad or good. That is where so we as a platform are very clear and transparent. No financial provider is bad, no financial provider is good. The one who is most suited. So suiting is on three things. Again, eligibility, whether you're eligible or not, that's the first thing. The cost, which means the total cost of the interest rate, the processing fee, the forex charges, everything included in that. And the third is convenience. Do they come at your house? Is it online? How much you have to run around? Based on these three, this is what you have to look at.
Will the bank providing loan deduct tax at source as per the new budget provisions?
Yes. So at the moment, I think there has been amendment on that. I would not be the absolute judge on it. There has been amendment which has come in. However, there will be, in most probabilities, as per the earlier rule, they were going to deduct it. But this tax, as a point, gets adjusted with your income tax of your parents. So it's actually not that it is taxed completely. It is part of the income tax, and you get a refund later on. So that's what happens.
What is the average approximate rate of interest on loans from US banks?
Depends on cosigner. So it could be between 3% to 7%.
With LIBOR reducing and INR depreciating, what is much better to go for USD loan or INR loan considering all factors and no collateral available?
So again, this so if the rupee, so scenario number one, the rupee does not depreciate, it's already there, and you get a good rate from the US, then dollar loan becomes better. But if the rupee depreciates a lot, so last year students, those who took dollar versus rupee loans, at the moment we will look at I think right now rupee loans are better, but in the long term you never know. If the rupee strengthens against the dollar, then suddenly the ones who have taken dollar loans will be at a loss. So it's a lot of permutation and combination.
If US banks decides to fund for online semester this fall and we go for it, can we get sanction letter from Prodigy for visa interviews later on for spring?
That I guess will be out of my purview for the visa questions, very honestly. In terms of US loans, the US and Prodigy are two independent people. You can apply to both, and you can take avail or sanction letter from both. How and when you lose them from the visa purpose is what we don't want to discuss on this platform. So that I leave it to you.
What are your views? Just a couple of more questions. Yeah.
Okay. Yeah.
What are your views on the lucrative deal offered by Leap Finance, with it being the newest lender in the market?
So Leap Finance has certain advantages. So I would not say it is a pure product based on university and course. It is a product which has a mixture, which means university plus course, plus they do take in whether you have KTs or no. I'm myself an engineer from Somaya, so all of the guys in people we do kind of sometimes not manage it, but they take that into consideration as well. They also take into consideration your parents' profile or their civil scores. So they have certain checks and balances in place vis-a-vis which the other lenders did not have. So that's a positivity from the lending perspective. In terms of they are aggressively promoting it, and their interest rates are good at the moment. So it depends what your options are. If you get a good interest rate from them, please go ahead. You can look at and what interest rates you're getting from the other lenders. So it all depends on cost. That is where. So that is when we say 2-3. You apply to 2-3, say where you're going, and then take a call.
After my loan is sanctioned, will the interest rate that will be charged to me keep changing?
Yes, unfortunately, yes. Interest rates they're not fixed, which means what you get on your sanction letter, say at 11 point, and you have negotiated very hard. So, for example, if you have negotiated at they offered you 11.25 and you negotiated hard and you got 11.10, this 11.10 is not fixed. It changes. It's basically a cost of fund relationship. So if the cost of fund of that NBFC, etc., or the bank or the repo rate goes up, automatically your loan or the interest rate goes up.
What is the margin on collateral against the loan?
Up to 100%. So generally it is 80% to 100%. So which means if you're looking at an 80 rupees loan, you look at a 100 rupees collateral.
Does private loan provider give collateral loan?
Absolutely. So they give 100% to the collateral. So they are quite good in giving that, and they are also ready to take in certain, how do you put it, certain in case your property is not completely mortgageable or has certain documents missing, etc. You have higher chances with an NBFC to get your loan passed looking at a collateral versus a strict kind of a very bleak chance with say SBI or BOB, which will look at complete documentation of your property. So 100% property loans are possible with NBFCs or private banks. Just that for the same thing, they're slightly more expensive. So the choice is yours. They do offer convenience at home, and they do offer their RMs which come and visit you. So that's one thing which is convenient. So the call is yours, which one you want to take.
So there's just one last question that we will take for today, and the students can then feel free to reach out to the loan counselors at EduLoans, and they will be happy to answer the queries that you have. So the last question is, does SBI or BOB give non-collateral loans?
No, they don't. So both these lenders only give collateral loans, which means that they are strictly looking at mortgaging your property, physical property. The physical property could be in the form of a car, a house, or could be in the form of an office space. BOB and SBI can look at your slightly liquid assets such as mutual funds or look at maybe gold, etc. But they generally don't prefer it. So they will mainly go in for your security assets. They will not give you unsecured.
So that was the last question we had. And we see students thanking you for this session, sir, and for answering their questions.
So so now we have, so what we have called is, although more if you're looking at the other important aspect is your university admits and how university will react. So we have with us Hiren Rathod, who basically is the head of business for the US from Imperial. who would want to share his thoughts on how universities are reacting and how you should best embrace yourself with COVID-19 and its impact. Over to you, Hiren.
Good evening, everyone. I hope you can hear me and see me. I hope all of you are doing fine in this current situation. I sincerely hope that you are not frustrated at home right now and trying to do things to keep yourself excited and cheerful in this moment. I can completely understand the frustration that is going around. More so because yes, we are home, no doubt about it. Nothing else to do, ideally speaking. Work from home is going on. Efficiency levels are a bit low, which is understandable, but more the thing is we are not sure when we are going to go out. The lockdown which is there ideally as of now till 14th of April, will it be there till 14th itself or will it be extended? No one knows, and this uncertainty is something which is actually killing us right now, or rather which is getting us into the frustration level. And the same uncertainty, if you look at it, is going on the university level as well, because the universities are rolling out their admits and rejects as per their timeline. They are not, how do I put it, they are not so much affected by it. Okay, the universities are also doing a work from home. The university also shut. The employees of the university are working from home and they are trying to evaluate your application sitting at home, and they are giving decisions. Obviously, in this process, the communication, the connect is a bit, the efficiency of communication and connect is a bit reduced. And owing to that, the universities are taking a bit longer than expected to give decisions. But it's not like drastically longer. Like if, let's say, for example, some university would have given a decision on 1st of April, they are now giving it on 7th or 8th of April, like a week to 10 days behind schedule, which is okay. It's not like if the decision was expected on 1st of April and they would be giving the decision on 1st May or 15th of May. It's not like that. Okay, so the university decisions are coming, and many of you here, I don't know if you can see, but I can see the number of attendees or the names of the attendees who are here. Honestly speaking, personally, I know quite a few of them, and I know most of you have already received your admits and rejects from the universities. Your decisions are out already. Okay, some are waiting for the dream admit. Fair enough, and now anyways, it's a time to wait and watch. Certain things that I would like to clear here. First and foremost, with regards to the visa. Okay, the embassies are shut right now, absolutely shut since 14th or 15th of March. I don't recollect the exact date, but it's around about that period. I'm sorry for this, but since 14th or 15th of March, they are shut. They had a notification, an official notification, which said that owing to the COVID-19 scenario in your home country, we are shut as of now till indefinite time. The moment situation in your country improves, we will be back on. Okay, they have very clearly said that the people who have booked their visa interviews in this period, your interviews stand cancelled as of now. Once we open up, you will be given an opportunity to reschedule your interview to whatever dates are available once we reopen. The embassy clearly states that we will not charge you anything extra. The fees that you have paid us for your visa fees actually will hold true, and you can use them to rebook your appointment. For people who have not booked their appointment, whenever we reopen, you are free to schedule your appointment as long as you have paid the visa fees. This is something which is an official notification coming in from the embassy. Okay. Now, what happens is people are going on the visa embassy website and they are checking out. Some days back, the next available visa date was 1st of October. A few days back, it just became 1st February. It became 22nd February. Don't panic. It's not like the dates are not available till February or something. It's just that the embassy is shut right now indefinitely, but they are shut right now, and that's the reason why it happens. They have a system on their website wherein they have to flash the next available visa date. That is the reason why they are showing a date available over there, whatever date they show. Even if it comes out to be 1st April of next year, it's okay. Because the moment the embassy opens up, that is dynamically going to change. Their immediate dates are going to change. One thing that I have been telling the students through emails, through webinars, through live sessions, through different sources, or even phone calls or WhatsApps is, even if the embassies, even if like point is things, if things normalize by 1st week of July, the embassies open up by 1st week of July, things become fine by 1st week of July. I mean, the latest that we can wait is till 1st week of July. Things happen till then, you can practically make it for the fall 2020 session. Very clearly, if things normalize by 1st week of July, you can make it for the fall 2020 session. 1 month would be there. See, because you would be flying somewhere on 10th, 15th of August. Your college will be starting somewhere after 20th of August. 10-15 August when you'll be flying, you'll have a month's time, sorry, to complete the entire process. Now, I got a couple of questions somewhere that it is not so soon. I mean, in 1 month, we can't get everything sorted. Point agreed. But the main point here is that if you have your documents, if you have everything required for your visa interview ready by first week of July, you just fill up your form, book your date, and you will be able to make it in that 1 month's time. That is the main thing. You need to be prepared. You can't be like, हाँ जब होगा तब देखा जाएगा. No, sorry. Be prepared till then. If it happens, well and good. If it doesn't happen, then for the next semester or the next year, we'll see what is to be done. Now, this is the same thing that universities are also saying. Many of the universities are very categorically mentioning on their websites that, or emails that, as of now, we are expecting the fall semester to begin on time. Okay, many of them are saying that. And they have a disclaimer below, they have a note below stating that, however, if things don't improve by then, we would provide you options which will not be a loss-making situation for you. Wherein some universities have already started mentioning that we will be taking up the fall courses online. You are free to choose that option. Wherein for the spring semester, you can physically come on campus, you can start the course. Some university, and another option being given by some universities is that you can defer your admit from fall 20 to either spring 21 or fall 21, but only for up to a year. You can't do it beyond up to a year, which is again a fair call. So it is up to you to decide. But again, these universities are not asking you to decide now. I have seen some universities giving deadline of 1st June, some universities giving a deadline of 1st July, some even giving deadline of 15 July for you to determine. I feel 1st June is a practical deadline given by some of the universities right now, because 1st May will not be a practical deadline. I'll be very honest with you. 1st June is a very practical deadline. 1st July is like a cushion, a big cushion given to you by the universities. I know of some universities, I won't name any universities over here, but I know of some universities who have very categorically mentioned on their website that if you want a deferral to a next semester, don't ask for it right now. Come to us on 1st July, because our portal, our application portal for the spring and the fall semester for the next year will begin only on 1st July. So come to us post 1st July and we are free to give you deferral based on the situation around. So this is something that you need to understand. This is what the university's official stand is. Bottom line, be patient. Be patient. Again, a month, 2 months, it goes, it's okay, no problem. For people who are working professionals who have a 2 or 3 month notice period, that is a tricky situation, honestly speaking. Discuss with your HR. This is a new situation for everyone. Maybe you can discuss with your HR regarding your notice period being reduced, or if you are on a notice period and if things don't improve as we are expecting right now, like everyone is expecting that by June things should be fine, or rather hoping that by June things should be fine. If your company is not ready to reduce the notice period, maybe you can ask them that if I give you a notice right now and towards the end of it, if I feel I'm not able to go, can I take back my resignation? Okay, you can request. There is no problem. Again, these are new events. I am speaking to our students daily, and many students have come up to us and told us that yes, we are resigning, and yes, our company is giving us the option of taking back the resignation even a day prior to the last day of our work. So these are some things you need to be practical. You need to be very practical now. You need to start talking to your HR if that is the case. Okay, this would surely help you a lot. And again, the one more thing regarding economic recession across, yes, it's there. Let's be honest. It's not like there is no recession. No. All economies are doing very well. The US economy is doing good. UK is doing good. Europe is doing good. Australia is doing good. India is doing good. Let's be honest. It's nothing like that. We know that very well. Recession has begun. But if you look at the trends in the previous cycles, whenever there was a recession or a depression or something, it took max a year's time for the recession economy to improve on their end. Even if, fingers crossed, hopefully by August 2020, you all are able to fly, you would be graduating somewhere in May of 2022 or December of 2021. Okay, 1.5 to 2 years down the line. Economy surely will improve from now to then. That is what we have seen historically as well. And in a growing market, getting a job becomes far easier than a already developed market, because whenever the market is growing, companies are looking for newer people because they are getting newer projects. That is the reason why. One more thing I'll tell you, USA is facing election this year. November 2020 is the election period in USA. Owing to that, every time whenever there is an election coming up, yes, the companies do freeze hiring for some reason or the other. And as soon as the elections are done, the freeze is lifted and they start hiring. So this is generally happening. Like ideally, from July till December of the election year, things are not that great. But this year, owing to addition of coronavirus in this entire situation, things are worse than expected. No doubt about it. But again, once the coronavirus dials down, once the election gets done, I am anticipating Jan 2021 the market to open up. So for me personally, going in this semester is no harm as long as the virus threat is minimal. Because again, at the end of the day, going for education, going for your studies and everything is at a different angle. Health is at a different angle. Health is the topmost priority because we again do get parents asking us, telling us in the current scenario when the situation is not improving right now currently, we are worried about our kids' health. So we are thinking whether to send them or not. This is a fair point. Health first, rest all later. So again, bottom line, what I'm trying to say, what I'm trying to summarize with this is wait and watch.
जान है
Take
तो
2 months.
जहान
It's
है.
okay. I agree with you, Panit. Jaan hai to jahan hai.
जान है तो
Completely
जहान
agree.
है. Simple. So
So
the
we
bottom line is that that is what, that's why we are all sitting at home and
yeah. So we
relaxing
wait till July first week.
in whatever
Yeah.
tension.
Bottom line, we wait till July first week. Absolutely correct. Absolutely correct. So yeah, again, I was saying we wait till July first week. If things improve, well and good. We go ahead with fall 20. Ideally, let's keep our things ready till then. If they don't improve, then we are there. Spring 21, fall 21, a lot of things is there. World is not ending. It just has a small speed breaker right now. We'll overcome it, but the world is not ending. Okay. So everyone, stay safe at your home and do let us know how you're doing right now. We would like to actually hear on. We get to
Correct. So
professional level. We get to hear from people what is up, what they are up to or something. On personal level, what you're doing to keep yourself sane right now. We would like to hear that. Please send in your feedback on that part as well. Thank you.
correct, and thank you, Hiren. So that's good. So I hope this session was informative, and all of you guys, in terms of education loans, you've got a bit about the eligibility, about the interest rates, how they might fluctuate, processing fees, what is the difference between refundable, between transferable and partial, how to look at a US dollar versus INR loan, which you have already looked at, and how to go about it. So do not delay as far as your education loan goes. Please start building up your documents. Most of them can be applied online. uh, please contact your EduLoan RMs across the board, and they will help you to apply the loan online and get your initial documents reviewed and checked. And eligibility parameters, you like tick those boxes and keep them ready. And as and when things develop, and they cannot get worse from here. So as and when things develop, and how fast we are on the recovery scale, you can look to get to your education loan. So any other queries, we are available at EduLoans across on our platform. Please reach out to us. Anybody who wants to reach me, definitely can. I would be ready to take in more queries, etc. We had a lot of queries. A few might not have answered. A few of them have put in their queries in the chat box during when they filled up and came in for the webinar. So those ones I will definitely reply to, and we will give you a reply on those queries which come in. There was a lot of numbers, 30, 40. In fact, that would have consumed the 1 hour itself. Queries which came in due to, we called in those queries and what is the concern areas right now we have. So that is what we will be doing in this next week. In terms of EduLoans, we will be looking at mapping. We will be working with a complete file wherein we will be able to, you can upload your documents there, and we will be sending them out to various financial providers. That will definitely happen in the next week or so. So we are building up platforms. We are looking at faster turnaround times, conveniency, and everything which will give you more clarity. And hope to hear from you all soon. Thank you. So we'll cut off the session, and we look forward to hear from you. Bye.
We thank all the students for being a part of this webinar today that was organized by EduLoans, and we hope you all stay safe. and we hope that this pandemic worldwide ends at the earliest. Thank you from all of us, and bye for now.
Yeah, yeah, and thank you for being a patient audience.